All right, everybody, welcome. It is Tuesday, April 1st, April Fool's Day. I don't know, is the up move today the April Fool's joke? I don't know, but the markets are up currently on the session, so keep moving higher. Let's jump into some charts and we'll take a look at charts, some trade opportunities, and then we'll take a look at the account and maybe sketch out a few trades for everybody here. All right, let's get going. So, in fact, let's look at a intraday chart here. Certainly was a good opportunity on the zero DTE side to enter right here around 10:20 or so in the morning, bounce off of this Bollinger Band, and then we have gone nothing but straight up since about 10:20 today. So been a good last hour, almost. Not quite an hour, but last 45 minutes to an hour, where the markets have gone up. So we gapped down a little bit at the open, sold off a bit, and then we have rallied since then. Nowhere in danger of yesterday's lows and continuation today. So continuation on the day is a good sign if we can hold up. Let's see what the volume looks like. I don't know that we just go straight up, but not too bad. All right, so there's the intraday day trading chart. Let's get in here and take a look at our dailies and weeklies, then we can go a little bit more in depth. Grab my paper here and let's sketch out some trade opportunities and trade ideas. Where's the market? Well, we've definitely got the majority of this H pattern working. We've got the lows down here about 55.30 on ES. On the E-minis, which we bounced off yesterday on decent volume. So a good volume, kind of a reversal day on the session yesterday. And we are getting a little bit of follow through right now. Early on, we were selling off, not much follow through, but a little follow through today. The key here is, can we get some follow through? Now we've got, the whole Liberation Day thing with tariffs and stuff tomorrow. I don't think that's going to solve anything. I think all you're going to know is what the U.S. wants to do with tariffs. Then comes the retaliatory tariffs from everybody else, maybe. And then there's back and forth. So I don't think that anything's really going to be decided tomorrow. So if you think the market's just going to rocket up, well, maybe it will, but I don't really see a reason because it's just the first volley in the war on tariffs tomorrow. Really, probably the second volley, considering we've already gone after Canada and Mexico and China. But going after the rest of the world tomorrow with all the reciprocal tariffs, we'll see what happens on it. I would expect that will come out with probably reciprocal tariffs unless Trump decides to go with the whole 20% across the board thing. I don't know. I think it'll be more just one for one for the most part. But what do I know? I'm not in the cabinet and not an economic advisor for it. But I am. I'm kind of for it. So I'm all good. I mean, if somebody's putting a 2.5% tariff on U.S. cars, goods, whatever, then put a 2.5% tariff on their goods. Okay. And then if both people want to remove it and put it back to zero, so we have a nice free trade agreement, then I think that's perfect. But I don't have any problem with the U.S. putting tariffs on countries that are putting tariffs on our goods. Just make it fair. And I think that's all good. Now, we're going to come out with all of that tomorrow. We'll see what happens. And then the question is, does everybody raise theirs? So if they're doing 5% tariffs on the US and the US slaps a 5% tariff on them, are they going to go to 7.5? And then do we go to 7.5? Where does it stop? I think that's going to be the unknown, but at least we'll know what the general US plan is on things. And I think the part that the news outlets and nobody is missing is, I believe, the goal behind all of this is generate billions for the country. Totally fine with that. Again, I'm not being political here. I'm just giving the overview of why the markets may be doing what they're doing. But then if you're going to implement tax rates lower to offset the cost of the goods, and you're giving tax breaks to the lower middle class and middle class to offset that, I think that's all good. And I posted something yesterday from Stephanie Link She doesn't really see a recession happening here. We'll see what happens overall. But as far as what we think, that's one thing. But let's look at what we see. And what we see right now is the market's, pretty heavy, 10% sell off, a little bit of a rollover, a weak little, bear flag here, broke the bear flag to the downside. We hit the lows and bounced, but we haven't not done that on a lot of charts. I put a bunch of them in the Discord today, so I gave you a bunch of the different charts, but we can run through those. MACD still rolling over here on the daily. Stochastic momentum still falling, and the RSI still really just heading lower. So again, today, not a bad thing. However, this does not make an uptrend. I wouldn't go and get all long and warm and fuzzy on anything here. It's good constructive bounce. Maybe the lows in, maybe we're getting the double bottom, the W pattern, or maybe we have the H pattern and we go back down and break this. We really can't tell at this point in time, so I think you've got to just be smart and be cautious here. I wouldn't go getting all kind of crazy long on things. I think that's just not productive and not playing the percentages and not trading what you see. If what you think is, oh, the world's going to be all rosy tomorrow after the tariff announcement, which we don't even know what time that is, but uh, I just think that's foolish and not smart to go get all long. Will you miss it if we rally hard tomorrow up 100 points? Yeah, you're going to miss 100 points out of 5,000. Yeah, you're going to miss a 1%, 1.5% move. Big deal. I would rather know and see the whites of their eyes before I open fire. So I posted some trade opportunities, but these are all dependent on what happens. So there you go. Um, but the fact that we're consolidating in here, I think is a good thing. But if we break it on strong volume, none of that's going to matter. But we'll see. It's constructive and certainly good for our accounts because the more sideways action we get, the more money we will make here. So we do best in a slowly declining market. We do good in a sideways market, and we do pretty good in an up market as well. But sideways to slightly down over time, definitely best for our style of trading. All right, so there's the E-minis. If we're looking at the weekly chart here, we've broken the 50-day moving average. We're trying to get back to it here, but that's providing a little bit of an overhead on the day. Now, MACD might start to flip this week, but we're only 2 days in, so nothing exciting here. I think just keep watching this. And maybe I'd just beat this chart to death a little bit more, but I guess the point is on ES here, I'll strangle it, and we have a strangle on. I'll put some discretionary 112s on here. I just don't want to get long too much at this point, and I don't want to be short at this point either. So I think you just want to play something that's a pretty neutral-ish trade, which would be the strangle or the 112 or any kind of discretionary 112s on this. I don't even think I would do any kind of a jade lizard or something at this point. All right, so there's the ES. If we're looking at oil, so oil's been remarkably strong the last couple of days. A lot of this was on news that Putin not playing nice and Trump may slap some sanctions on Russian oil. I don't know if that's going to do anything or not, but you can see we had a pretty big rocking up day yesterday, right to the anchored VWAP today. A little follow through on that. We'll see. It wasn't a massive volume day yesterday. So, relatively speaking, it was a kind of just an average volume day at best on that. So that doesn't really make me think that the bottoms are in on this. But if we're looking here on the weekly chart, this is more of a descending triangle pattern, but really just a lot of sideways moving. You're right at the 21 EMA on the weekly. We're a little bit above it here on the daily chart. We're getting a little bit strong. So I'm going to hold off on any kind of strangles in here, but I do think a 112 here is worthwhile. I also think an inverse jade lizard here might be a play. I really don't see a world where crude oil is going to rocket up into the upper 70s and 80s anytime soon, barring some kind of a new event somewhere. Uh, yeah, I don't think sanctions on Russia or any of those things, I don't, I just don't see it, are going to drive massive upside. I think yesterday was way overblown on it, and I think we'll cool off. I mean, you see we're cooling off a bit today. I don't think Strangle's the best play, so I think I would prefer uh, the 112 and potentially a Jade Lizard would give me no risk to the upside. I think the risk is lower, so I think maybe even an inverse Jade Lizard. Um, don't know. Don't see a reason again to drive crude super high. And you've got production at highs, and I don't think demand is there. So I think supply is heavy. I think demand is not quite there. If you think the U.S. is heading into a recession, then why the heck would you go long on oil in here? I just don't. It just doesn't make any sense. Not that we're going into a recession, but if that's a prevailing and increasing thought out there, nothing. We're fine with our trades. I'm pretty happy with exactly where we are. And we've got a strangle on that's existing. I'm fine. I don't think we rocket up a lot higher. I wouldn't enter a new one here until a little bit of a pullback. All right, it's probably way too much talk about oil. Gold just continues to be super strong in the face of all of this news. Gold is right now the flight to safety trade. You've got bond yields falling. Okay. That's no bueno. I mean, why do I want to buy bonds if the yields are falling, except for the fact that they might be a flight to safety? Okay. What would be better than bonds with low yields? Maybe owning gold. So gold's the flight to safety trade. You're seeing countries around the world actually getting physical gold, not just trading it, but they're actually buying physical gold versus the paper. And there's only so much gold. So gold is one of those things, kind of like a Bitcoin, but there's only so much of it out there. And if the demand starts to heat up, there's only so much of a finite resource. You can't just make more gold tomorrow. Oil right now is not a finite resource. Maybe eventually someday it will be, but you can drill for more oil, but you can't just mine for more gold instantaneously uh, out there. So gold moving higher, well over its 318. Well, not well, but it's over the 3 ATR. It's at the top of the Bollinger Band, which has been riding up in here on the daily. Well overbought on RSI at 78, almost 79 here on RSI. You got stochastic momentum overbought. If we look over here on the weekly chart, MACD has been running higher. RSI is overbought at 77. Stochastic momentum, they're still running higher. So they're still going higher, but I think they're getting a little into nosebleed territory. I don't know how much higher this thing has left in it. If the market does start to turn around, which it's doing a bit more today, so the more I talk, the higher this goes. I don't know if I have a couple hours in me, but we'll go as long as we need to. We're up 17 points since I started yapping, and I don't really have a trade for gold. I do have the inverse Jade Lizard on. I kind of like that trade here more than when I put it on. A couple of us had something similar on. I think a few others here did it, and I know who was it? Time Merchant, I think put kind of tweaked his a bit and moved it from a inverse Jade Lizard, converted it to just a standard strangle yesterday by closing the put spread and just selling the put at a little bit higher strike for a little bit of a credit. Maybe good move. Maybe they'll pay off. I'm just holding in here. Let's just see if this thing just keeps pushing the envelope or does it run out of steam here. and if gold does run out of steam, it could have a pretty strong pullback to at least that 3,000 level or so. So I'm going to hang in there with it, but I don't like any trades. I guess if you think it could go higher than a broken wing butterfly, uh, call broken wing butterfly might be a decent play. I just don't like it here. I just don't want to touch gold. I don't want to short it. I don't want to be long it. I don't really want to strangle it. There's really nothing that makes me want to play it at this point in time. But if you think it's going higher, why not just do a broken wing butterfly and save yourself all of the strain of capping this thing? All right, let's go to bonds. And bonds have rocketed for 3 straight days. They've run from 115 to 118 and change. So bonds super strong. We do have a strangle on here. The strangle's at 128. If we're looking at the weekly chart here, it's way outside of the 3 ATRs to the upside. I think I think this was the pullback and the best opportunity. You can see this anchored VWAP in white. We bounced right off of that thing and sailed higher, right off the bottom of the Bollinger Band after the anchored VWAP. Flipped the PSAR today. Bonds look really good. I would want to probably be long bonds over time. I think from a trade perspective, a 112 with don't set up well on bonds. So potentially maybe a naked put or a put credit spread in bonds would be the play. 112s just don't set up well on bonds. But I think if you could do some kind of naked put or put credit spread, I think this would not be a bad trade there. If any of these trades interest you too, let me know. We'll spec some out. Copper, it's pulling back a bit. This is exactly what I expected gold to kind of do in here. Let's see what happens with gold. But copper pulling back, it got a little bit ahead of itself. It's all good. Pulls back, might have another leg higher. Right now, this is just in a nice, solid uptrend, and it just continues. So on any weaknesses here on copper, barring a recession or something else, I think you can be looking to get in and get long on pullbacks. I would say if you were doing something on copper, I would probably be closer to like a put credit spread than I would just be buying long by doing like naked puts or something. All right, silver, same type of scenario, little bit of consolidation happening in silver. I don't really trade it a lot. It's not my favorite thing, but it has had a nice, steady, uptrend now for quite a while. This thing looks pretty nice. Okay, it's getting a little overdone. Nice pullback happening. If we can get to the 21, then I think you do the same thing with silver in here. Don't know that I would necessarily strangle it here, but I don't think it's a bad strangle move. I'd like to see a little bit more pullback. All right, NASDAQ, it did break that low, the March lows yesterday, rebounded. Today it's up super strong. And so we're getting a really good move on the NASDAQ. Why? Well, you can see here the Magnificent Seven, certainly making their runs here. So I've been calling it the lag 7 here, but the Mag 7, either way, all up decently today. Tech stocks are up, and if we look at tech, tech's up, XLY is up, XLC is up. So you're talking XLY being with the consumer discretionary, this is Amazon and Tesla. XLC, which is communications, is Google and Meta. XLK is up, which is your techs, your bigger techs. Energy has continued to be strong, and financials has been strong. And today we're getting a retail bounce as well, sector-wise. So there you go, a little bit more analysis on that. But because techs, communication, all of those are up. I did call them the lag 7. I actually posted Craig. I put that actually in the Discord today so maybe people thought that was a typo, but it was not. All right, and they are lagging behind. There are other stocks out there doing better than the Mag 7. All right, so here's the Russell. Now the Russell again, that beautiful, nice H pattern here, bouncing off the lows, getting some follow through today. I think you just got to hold off. I mean, you just can't jump in here. Uh, I don't know that tomorrow's the all clear at all. I'm telling you, I don't think it is. I think there's going to be a lot of back and forth, but maybe get a little clarity. I think the market just wants some clarity, but on what we're going to do. So we'll see what happens. Is that going to be the all clear? Maybe. I don't know. If not, we could break down below here. I don't think small caps is the worst spot to be in here. It certainly hasn't been the big rallying point that Tom Lee was predicting uh, on RTY, but I think you could put credit spread this. I think you could also potentially start uh, to leg into this a little bit. I'm going to wait. I don't want to do anything crazy yet, but if rates are falling, that's great for small caps. Tariffs, not so great for small caps. So those things are kind of offsetting a little bit. Tariffs really going to kill your small caps. So depending on how bad they are, small caps could absolutely be absolutely spanked out there. All right, the Aussie dollar, it still sets up great in my opinion for a strangle. We are not in it. I would consider it. So depending on uh, my buying power, which right now I don't have enough to want to get in. I tried to get into this thing the other day. I'm close. I'm very close on buying power. Just a little bit high, mainly due to SPY. But I think 6A is still a strangle. And I think this still gives you an opportunity. I also think 6E is also a potential strangle in here. So I think the euro is a potential strangle. And I also think that the British pound is a potential strangle. So I think any of those forexes are potential strangles. We know also that Trump wants to drive down the US dollar. Okay, so the administration wants to kill the US dollar right now. Okay, what that's going to do is, and you can see as the US dollar has been dropping, let's go to the US dollar. So, where was the high? Well, the high was here in, beginning of January, and it has just absolutely been taken out and spanked. So the US dollar dropping heavily, which is exactly what the administration wants. Okay, so they want a decline in the US dollar. And when you start to look at charts like the British pound here, okay, they're absolutely the inverse of the US dollar. If you look at the euro, it's the inverse of the US dollar for the most part. And then the Aussie dollar hasn't really responded as well as the other two in here, but I do like it as a strangle. This thing has just been in a great range. All right, let's pop out. Oh, and gold. One of the reasons for our gold position to be a little bit under pressure. Yeah, we've moved up in gold, but really what we've done is we've moved from this low down here on March 26th. We've moved up substantially here, probably almost 20%, not quite in volatility on gold. So gold volatility absolutely cranking to the upside, and now maybe topping out a bit. This is typically when we look at uh, this on a weekly chart. This is about as high as gold gets. It can go a little bit more up to 20, but on average, we're well above average on gold volatility, which also gives me some indication that maybe um, we can just hang in there with our gold trade. So it's overextended. Volatility is a little high. And if we look at oil volatility, there's just nothing there. As oil's been rocking up, oil volatility's been pretty doggone low, so it hasn't been a whole lot of IPR or juice in that. All right, that's really quickly. We have 2 more minutes. We can cover a couple things. So let's just take a look at. Yeah, Chuck, I think that's a good one to look at. I think that is a defensive name, and we'll take a look at that name. So we'll take a look at some defensive stocks. If things break down, where are some defensive stocks? And again, I don't want to make this too much about stocks because that's not really our thing. But Amazon here. breaking this, you get the H pattern, breaking the low yesterday, but finishing above it, dipping below again today, and now rallying higher on Amazon. Amazon is by far my favorite of the Mag 7s. I think this thing holds up pretty well. I don't think they're super AI, chip dependent, but I think they're definitely, and I think they're looking at making their own chips and stuff now too. Amazon does everything. It's the Death Star. You know, it's the company. They do everything, and they do everything pretty doggone well. They lead the world in delivery services. They're bigger than they do more deliveries than UPS or FedEx. Either one. They're the number one delivery company. They're getting into pharmacy. They're the number one retail. And if you look at all your shopping centers, everybody's out of business because Amazon's killing them. Okay. Are tariffs going to hurt Amazon? I don't know. They just passed everything through to the consumer. So whatever they're selling, people are buying. Okay. Why? Because it's convenient. So people are still going to buy on Amazon and Costco, the two big retailers out there. And I think you can throw Walmart in between those three, but I think Amazon's a better company than Walmart. But we'll see what happens. But they're going to absolutely take advantage of the AI revolution with robotics for warehouses. They've reestablished, as of yesterday, I believe, two drone deliveries. Okay, so we got Amazon back activating the drone delivery stuff. You don't need me on camera. I'll get off, but I think that's also helpful. So anyway, that's my takes on Amazon. And somebody posted something in our Discord. I had also posted something similar on Twitter. But if you look at strictly the financials on Amazon, I mean, look at earnings. Okay, as they just keep crushing estimates every single time on earnings. So EPS just keeps growing and growing and growing. Looking at it, a quick overview of these things, taking a look at their growth. Growth has been awesome, fantastic growth. Okay, debt not, hasn't been increasing. That was a big thing for Amazon. So a PE of 34. Okay, I think we looked at this. Look at the PE ratio. I did this yesterday. And maybe if I'm getting into too many weeds here with you guys, let me know. But if you look at the current PE of 34 on the right-hand side here, this is the current PE, 34. If you look back to just, a couple quarters ago, it was at 50. Okay. A couple quarters before that, it was at 103, 250. So the PE is way down. You're at 34.90 as a PE. I just think you got to be smart on it. So if you're looking at some of these stocks, I like Amazon out there. So anyway, there's my little sales pitch on Amazon. I would like to see more follow through. So again, I'm just holding on, not doing anything. We got to get through the next day or two, and I got to see that we're at the bottom again. As like I said on SPY or ES, I don't care if I missed the first 100 or 200 points if we're double bottomed. Okay, that's not really important. We still have a neckline to deal with. So all of these H patterns also have a neckline. Okay, and here's the neckline essentially on Amazon. Okay, I can miss some of this. I went, the neckline is where I really want to get in on things. You don't need to buy the bottom. So I think you just be smart. All right, Google, on the other hand, it did break the lows on pretty substantial volume. It barely made a move yesterday. It did come off of its lows. It is up today. I don't love Google. I don't think that while they do have YouTube and they do have advertising, I don't think their browser is without competition anymore from all of the AI chat bots out there. So I see weakness ahead for Google, even though they have a nice self-driving car here. We'll see what happens on this. It's not as healthy as the others. I'm staying away. All right, NVIDIA hit the bottom yesterday, pretty much almost at a penny at the open, and then rallied higher. again, nothing to do here. This is all, by the way, all H patterns are a descending triangle as well. So if I really wanted to draw these in, okay, descending triangle, let's actually take this thing off. We can put it, we can put it back in. I don't know how far over we can actually go on that. Okay. So this is essentially a descending triangle that we broke. We're trying to get back into it, but we could easily fail on this thing and roll over. So every one of these H patterns is devastating to the downside, but it also because it's also a descending triangle in a way as well. So which are no bueno. So we could bounce though. And that would invalidate this, but we have to get above this trend line. I think that's where you start to look to get in. So I think be smart, keep your powder dry, and I don't think you need to buy this bottom because you don't know that it's going to hold. I think it's this trend line that you really want to start to pay some attention to. Now, Tesla hasn't really had that same, clean this thing up. Uh, Tesla has been in this downtrend, and it is just getting beat up pretty heavily. I'm going to go something along these lines here. But they didn't break their March lows at all. In fact, they've been stair-stepping higher. Tesla looks the best of most of these stocks. We're getting close to this trend line as well. I think you just wait until the trend line gets broken and then maybe any retest after that. Same thing here. Meta broke its lows. I don't like it. Not my favorite stock. I don't think I really want to play around uh, with Meta, but here's your previous lows. Okay. Tried to break it. Today, a little bit of follow through. We'll see what happens. But on the weekly, this is pretty doggone ugly looking stuff. All right. And then Palantir, I talked about it. They also did not break the lows, okay, which are back here, give or take a few points. So we're not at these lows at all. Nothing here to get too excited about. I'll take this. Right. But we're holding on to this support line here, getting a bit of a bounce today. I know it's maybe not exciting, so we won't go through too many more. Costco also not hitting the lows. Okay, this thing may have already double bottomed and may already be on its way. The trend line, the initial trend line from here, the main trend line still down. Okay, still below it. However, the secondary trend line, which is this thing, okay, absolutely broken. So broken, we move sideways out of it. I'm going to take this thing off. We're moving up already on Costco. If you look at the long-term chart on this, I think this is a pretty good spot to get long. Bounce off of the anchored VWAP, pretty clear bounce as well. I like Costco in here. All right, real quick, JP Morgan also not testing the lows, at least not as of yet. So this thing looks good. And if you take a look at its trend line, again, that's the key to me is can you break the downtrend line, which is formed by that H, which it did break this downtrend line here. It came down. Maybe I'll even retest it a bit, but I think JP Morgan looks good. And then Hood also has not broken. It broke this first trend line. Okay, so now we have a new trend line out in here, but it on the first trend line that was here. Obviously, we broke the initial, created the bit of the rolling over pattern here. Still in a descending triangle until this trend line gets broken. I think you just be patient in here, right? So keep your powder dry. Wait to see what happens. I did enter Boeing yesterday. Why? Because I really like the weekly chart on Boeing here, right at the 21. It is still a bit of a downtrend, but I think the weekly looking okay. We're right in the middle here. I like it for the long term, and I think they've fixed some of their problems. Seems like doors have stopped falling off for now of planes, which is always a good thing when you're flying. And then somebody wanted to look at Berkshire Hathaway, and then we got to move on. Okay, you wanted BRKB, right? All right, so here's Berkshire. I mean, definitely a flight to safety trade. So as the market's been going down, this thing has been going up. It's getting a little frothy in here. Doesn't mean it can't keep moving up. I don't know. I don't love to buy something at these highs, even though it could continue to move up. I think if you want to fly, find something that's a good flight to safety, start to take a look at uh, energy, because we know that energy, okay, has been doing well as of late, and you could have, you could be making some pretty nice money strangling XLE, and then also financials rolling over, but they're not doing too bad. But I think energy gives you uh, a pretty good trade opportunity. And if I wanted to get long something that's a little more defensive in nature, I would look at this thing. Okay, so XOM, ExxonMobil is looking really, really nice up here. It's at these highs. I think I would want to wait a little bit more. All right, that's enough of that. Let's get into some potential trade opportunities with you. All right, so we came up with some ideas. Uh, and I think you just got to, we're sitting on really pretty good BP in most of the accounts. So we're ready to go. Whatever the market wants to do tomorrow, I'm pretty happy with where things are. All right, let's take a look at oil here. This strangle here is up, a little bit in 4 days. It's fine. Nothing to get too excited about here. And then we have a 112 trade here. There's no reason to take it off. We're at 76% overall. Let's let this thing go a little bit more on it. I mean, when you put oil trades on, they don't require a lot of initial, but I feel like the buying power just keeps growing. The more I have this, the longer I have these trades on, the buying power seems to expand. All right, so ES. Uh, yeah, it's just ridiculous because I think my buying power for this, let me look at the initial buying power that I put on was for the 112 trade in oil was, well, it's 10,000. Okay, so it was 10,000 for the 112, and then for the strangle was 12. Okay, so it's not bad actually. So I take that back. Is fine right now. Uh, I think it was a lot higher for me on something else before. All right, so I did put these two butterfly trades on. They're broken wing butterflies. We'll take a quick look here. Okay, so here's the broken wing butterfly. Here's where we are up here. This was in case the market decided to really start to sell off. So I opened up one 4 days ago, and then after a couple days, the market moved down kind of significantly yesterday. So I put on a second tier one, which is the one we're looking at right now. This is tier number two. When you look at these two together, that's what you get. Okay, so this is typically what when I would say for quite a time back several years ago. For those of you that have been in this Discord for more than probably 3 years, we did a lot of rut scaling butterfly trades, and this is essentially a similar type of a setup. A little different, but it's the same basic premise that you put on a butterfly, in this case, a broken wing butterfly, and as the market starts to move one direction, then we're going to scale it by putting on a second butterfly trade, which increases the tent. So you can see now the tent is a lot bigger, which is going to have a stronger pull on the market if we start. We don't have to get into it, but as this thing starts to decay, and you watch that T plus zero line, you can see how it's rising here. Probably went a little too far, but you can see how this thing is rising. So you don't actually have to get into the tent. You just got to be near the tent. The power of having these two on will make this a pretty nice winner. Okay, even if we get close, maybe we don't get into the trap, but we get like to 55, 60 or so. We'll make like 800 bucks on this trade. Even here at 5,600. These scales never seem to fit. We're still going to make like 400 bucks on this trade, and we have no risk to the upside. So if the market just cranks tomorrow, we're fine. As long as we don't blow through this thing, but we do have our downside here is defined. Okay, so the most we could lose if we blow through this like hard and we'd have to drop 300 points to get down into here, okay, or more. So I don't know if we're going to drop 300 points in 10 days, but it could happen. I mean, we can go up and down 100 points in a day. But I like this butterfly trade. Gives me a little bit of, I don't know if a hedge is a great term to use for it, but certainly it's just a play. If we sell off slowly or move down, fine. I think, and if we keep moving up, we have no risk. We'll make 170 bucks on this trade. It uses almost no real buying power. So, in fact, when we put this on, I mean, the buying power was like 700 bucks per trade. So it's like almost for me, it's like it's nothing on this. And if we move up any more, would I put on a third tier? It's possible. We could actually put on another slightly higher tier depending on what I'm seeing in the market and make this uh, a triple tiered one with a much bigger tent that if we move up tomorrow, but then we reverse back down towards the end of the week, this thing would really pay off well. Anyway, not a huge trade. I mean, we'd have to stick the landing here to make $3,000. I'm not really shooting for that. I'm shooting for something in here that's going to make me, I don't know, $600 or something like that. Would be a nice little trade. All right. One thing I wanted to take a look at today. I mean, this old FB 112, man, this thing is up $5,000 and we've already taken money out of it. That's fine. But I think it's this, these rolled put debit spreads. I'm going to give it one more day and see if the market really starts to rally. I think I'm going to take profits on some of these put debit spreads because this one's down to 16 days. I don't want to lose the fact that I've already rolled it and taken some money out, but I don't want to lose the other 700 bucks, or at least make a couple $100 on it. But it's this ratio hedge that has me a little intrigued here. The goal on this is to take off these shorts at 90% winner. Okay. Well, we're at 45 days left in the trade. I assume that will be somewhere between 30 and 45 days when we take these shorts off at 90%, which again will be $300 is what this thing's going to cost me to close this. Okay, I'll close it for roughly 300. If I close it today, it's going to cost me 540 bucks. The question is, do I want to spend 540 today to have 20 longs on? Even though they're far out of the money, it's still a very good little hedge if the markets start to move. I don't think this tariff thing is a giant vol event. So I don't know that I need a volatility hedge in here, but I don't really mind having this hedge on. Question is, instead of waiting to take it off at 300, do I just do it now, today, and give myself some downside hedge for the next 45 days? It's not a bad deal. So instead of 300, I would be paying $240 more than I anticipated. But is it worth it? to have a nice 20 longs for the next 45 days, it might be worth it. I'm debating on this thing, taking this early. I'm really struggling with whether I want to take this, do this or not. I don't, 240 bucks, I've lost more than that. Hopefully, I'll make enough on this butterfly to pay for this. To begin with, I'm talking myself into potentially closing this thing out if I get my price. So it's not there now. I don't think I want to go any higher than that. But if I get my price on this, the markets would have to move higher. They're up 27 points. If we go up probably 40 points today or so, I might get my wish on that. All right. Hopefully that's enough on that. We're at 57%. Let's see. Ooh. Yep, I am talking. This is how you do it. You just take a look, you think, you justify it, and then you got to just pull the trigger. So here's a naked put. It's fine, nothing to do there. I've got an at the money 111. We're just into the trap on it nicely. It's got too much. It's only been on for 12 days. Too much time decay left in this thing. I mean, if we really start to head down and this thing starts to pay off more, I could take it off early, but I'm not going to. They could put here down. Nothing to do on that thing. I'm not really too worried about that. Another ratio hedge. That's 60, almost 70%. So we're getting there on these. We're going to start to have some of these start to really come into play. This Jade Lizard's down a bit. Nothing to do there. It's not even a worry. So that's about it. The question is, if you had all kinds of BP, what would you do tomorrow? Is it, do you think tomorrow's an all clear? I really don't think tomorrow is, I think maybe it could be a decent day, but I don't think we're ripping like 400 points because I think there's just too many variables out there, and I think things are just not as great as they should be. So I'm keeping dry powder, but I'm not going to just throw it all in tomorrow. So I want to just stay in the game and keep playing my trades. This gold trade's down. There's nothing I'm going to do on this thing. I'm going to leave it. I'm going to leave it go. I think gold is getting a bit overdone here. If the market continues to strengthen, I think gold will continue to weaken. This strangles down slightly. I think bonds, you can't 111 anything in here. Not even good, strikes. Really can't do much. Okay. On it. You really just can't put on stuff like this. You could do a 112 trade, but even that doesn't work. So you can't do 111s, 112 trades. It's not a whole lot uh, going on. Yeah, I think Duval crush, Craig, is the big deal tomorrow. If that's what we really need is Duval to crush on both gold and ES, and we're going to be in good shape. I think you just keep, if you want to, do bonds using ZB or you want to use TLT, I think uh, either way you can play it. Potentially credit spreads. I might look at something along the lines of like this 114, 113 at 52 days. Let's actually go less. No, I guess not. Maybe let's do it again. So 114. 113. This thing's going to pay you 156 bucks. And for me, because of the strangle, there's no buying power involved. Maybe I need to put this into a different account. Let's look at the Lazy Trader account since there's no futures in there. All right. This is not a bad trade, in my opinion. 156 bucks on 315 in margin. It's a pretty good little trade. In here at 114, and if we looked at bonds, that would be below the March lows. We're getting up there a little bit. This is not the ideal time to put this trade on. I think I would just stay away from these in here. I just don't have a lot of trades that I want to crank on. SPY, I did add another poor man's covered call on this yesterday. These were fine. Nothing to do here. The covered calls on these, we've got $850 worth of extrinsic to come out in 3 days. So we sold these for 1220. I want to get my $1,000 out of this trade. I don't care I don't care if we blow through my strikes or go down. Doesn't really matter. I want my juice out of here. I want the extrinsic value uh, on it. So the goal on this poor man's covered call was also to what I'm doing with the SPY one, and I'll do it in other accounts, but they really haven't given me the opportunity to do that yet. But what I want to do is, as I'm selling covered calls on uh, I did a lot of ums today. I got to stop that for you. But on this, I've generated whatever, $3,100 worth of premium so far, selling covered calls. And I started this, oh, what, 49 days ago, roughly, 54 days ago. So in 54 days, we have generated $3,100 in one of the worst declines in history. Okay. So if we expect that SPY does recover in the next 290 days, if it just gets back to where it was, I don't care if it goes up. Okay. We're in good shape. But we've already generated on this trade $3,094. These, this trade, the original here, is down 4,100. So we're only down $200 on this trade. $200 down in the fifth worst drawdown in history. Okay? The fifth fastest 10%, I shouldn't say worst, fifth fastest 10% drawdown in history. And I'm down $200 on SPY in 54 days. I'm loving this trade. But the goal here was when I put a new SPY PMC on. So let's do this. When we go out here and like the quarterlies, let's just do the one before. All right. So if I was going out here and I was doing something around that 80 delta-ish, like the 455, you can see that when I buy this, it cost me about $6,400. So that's what this cost me in margin. Okay, not talking about my cash position, I'm talking about margin. It cost me $6,400. So my goal is every time I generate $6,400 from the selling the premium, I will buy a new leap. Okay. So I'm going to be buying myself new leaps every single time, and now I can start to compound. So if you're asking, well, and I put this in the Discord yesterday, but why did I jump in early? Well, I did add a new one yesterday. Why? Because I felt weird. Doesn't mean we can't go down another 10%, but if I go down 10%, I was able to get a pretty good deal. Okay, so I spent the 6,400 bucks yesterday. I didn't quite make my 6,400 to pay for it, but essentially I bought this thing for 6,400 in buying power using 3,100 in income generated from the covered call. So really, I got half price deal. Okay. So really, I paid only $3,000 for this, and I was able to go to the 450, which I really like, the 450 call on this thing. It's already up $600, 660 bucks already in one day. Doesn't mean it won't reverse, can't go lower, all that, yada, yada. But now I have two of them, and now I can start generating around $1,200 a week on this thing. So hopefully, depending on where we go, I mean, obviously, if we rocket higher, I won't, I'll still make my extrinsic of 1,200 bucks, but I could then lose some additional on it, which would, you know, hamper a little bit of but my longs of the credit, but my longs will go up. So my values will still go up over time anyway, which is the whole part of the at the money. Hopefully this makes sense. Hopefully you guys care. I don't know if I go through this stuff and you care or don't care, but I really Yeah, I did. Frank did it, but you didn't write calls against the spy. Like, yes, I did. I did it yesterday. I did post that in the Discord. So I actually added. Pretty sure I posted it. Um, uh, yep, I added a covered call, one more contract that made my average cost $6.10. So originally I had sold the initial covered call on this one, the one contract, I had sold that for $7, but then I added the one yesterday, so it took my average down to 610. But yeah, I did post that in the Discord yesterday that I added a covered call. So now you can see I have two of these covered calls running, and my goal is now to make twice that money. And if you look at what I've been making on these, all right, I have average. I mean, we have been in this for 54 days, and I've made 3,100. Well, 54 days divided by seven means we've been in this for almost 8 weeks. So 8 weeks. So I've made 3,100 in 8 weeks, which is average of about $390. So I'm pretty close to $400 a week is what I was making. And that seems about right. I mean, 494, 470, 509, 593, 354, 441, 354. So I think that's a pretty good um, estimate on what I'm doing. Here is making about 390, almost $400 a week. Well, now I'm looking to make hopefully closer to 800 a week on this. And the nice thing too about these spies, what do you notice over here on the far right? You notice the Vega, very big positive Vega trade, right? So 318 long Vega. So when you add SPY or in these leaps, you're adding positive Vega, which is very helpful considering all of the negative Vega. I mean, I have massive negative Vega on SPY, so because of all of these trades being on. But I'm fine. These trades are, they are what they are. They'll be okay over time. All right. So this is why we're down. We're down because of SPY. Everything else we're up nicely on doing pretty well. But this is the goal on this poor man's covered call strategy. The at the money poor man's covered call on uh, on SPY, selling at the monies, and the goal is every time I generate 6,400 bucks, I'll add a new one to it uh, there, which is about the cost. So now it should start to really compound. Now I'm hoping to make, instead of 490 a week, okay, I'm hoping to make about $1,000, 980 a week, almost $1,000 a week, which means I'm hoping to make around 4,000 a month on this trade. If I can generate $4,000 a month in the next 6 weeks, if that happens, and I can make 4,000, $6,000, okay, 4,000, making $1,000 a week for the next 6 weeks, I should generate around $6,000. That's the goal. Who knows if this will happen or not? Okay, that's the goal on this. I will buy a third. Okay, then I will buy a fourth 6 weeks later. Then I'll buy, and it may take less time because the more I add, the faster I make $6,000. So if I add three of these, okay, now I'm going to make 1,500 bucks a week. Okay, roughly. Okay, so in order to get to 500 bucks there, okay, now it's every 4 weeks. Okay, once I add the fourth one, and I'm making 2,000 a week, it's going to be every 3.5 weeks I'll be adding it. So the goal here, in theory, is to keep using what I'm making here to increase my overall SPY position just on the credit that I'm taking in. I hope that makes sense. It makes sense to me. So I'm giving it a shot here. You guys can see how this thing whole plays out. Um, and I think that's it. And that's good enough stuff for today. There's the whole reasoning behind the SPY trade. Uh, I think it's just a good add-on for everything else that I'm doing. And I don't really need the market, to rocket here. I just need the market to just kind of hang out. And if we drop a bit, I think it'll be in good shape. And are the CCs weekly at the money? 100% they are. Okay, this one I did a little bit out of the money. Oh, bam, where's it? This was a little bit out of the money. You can see right now it's at, oh, well, I just got filled. So told you that if we went up about 30 to 40 points, we would get filled. So I just got filled. So now I have a nice, really long, uh, where's my ratio? So the ratio hedge now, I sold the 12 shorts for, a little bit more than normal, but I gave myself a really nice long hedge. So I think that hedges everything pretty nicely. But yeah, this is at the money. Now I did this one a little bit out of the money, but I took in a ton of premium for it because volatility was very high and I was afraid of a bounce. So we could blow through this thing pretty well, which is what we're doing now. 556, we're at 562. So we're running through it. It's all good. I'm not worried about it because all I care about is the extrinsic. So yeah, I wrote this one pretty much at the money. Give myself a little bit of room. Risk of assignment. There's always the risk of assignment, but when you have this much extrinsic value in there, the risk is low. It's not zero, but you really don't get assigned usually when you have a high degree of extrinsic value left in something. You can see it's selling for $10, but it's only $6 in the money right now. Okay, so that means there's still $4 worth of extrinsic of that 10. Most people, I mean, there's stupid people everywhere, and you can't fix stupid, but the reason you get assigned early on something like this is because there's a knucklehead out there that would think that's a good deal. Okay, normally you don't want to buy options with extrinsic value, of 40% of the option. So, but as we get closer to to Friday, and extrinsic comes out of it, then you do start to run the risk of that. Will this work in a Reg T account? It will, but SPY's pretty doggone expensive in a Reg T account. Yeah, what happens if my shares get called away and I start all over? Okay, but my shares can't get called away because I don't own it. So essentially what I'm going to do is I'm going to if this would get assigned, I'm going to take possession of two contracts or 200 shares of SPY at 556 short. I will be short SPY at 556. I will be forced to liquidate these two to probably, I'll close it immediately. And then it depends on how much that loss is where I have to liquidate these or not. Okay. So if you have the risk, you just have to pay attention. But your shares aren't getting called away because I don't own it. I only own the leaps. So if I get assigned, I'm going to get assigned 200 short shares at 556, which is $6 down times 200 shares. I'm going to lose $1,200. However, I took in 1,200 on this. So if I got assigned today, I would be fine, right? Because I took in 1,200 bucks. I will make, if I get assigned, I keep my 1,200 bucks, okay, that I got assigned. And then I would have to pay to buy this back. I'll lose whatever the difference is, which right now is $6 times two. So it's a wash. All right, that's enough. Let's get out of here. A couple of you guys got to run. I got to run. And have a great rest of your day. We'll record this thing into the Discord shortly. All right, have a great rest of your day, everybody. We'll see you back in the Discord. Take care.